What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. Today, I wanted to give a June of 2023 stimulus update and inflation relief check update, as well as share some of the tools and methods I use to combat inflation over time. We're going to get into it, but really quick, just in case you're new, make sure to subscribe for new videos all the time. Subscribe to my second channel, which is my backup channel, for even more videos. Get yourself some DYDSS merchandise to help support the channel in the biggest possible way. We got t-shirts, hoodies, stickers, coffee mugs, and a bunch of different designs, bunch of different colors, many of which are helping raise funds and awareness for different charity organizations. Try out some G Fuel energy formula, $5 off your first order by clicking the link in the description. This one is snow cone flavor. You have 50 different flavors to choose from. Sugar-free, low-calorie, packed with a whole bunch of vitamins, and it's absolutely delicious. And of course, last but certainly not least, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account. This is my favorite stock trading app, and any amount works. Even as little as a penny still gets you your up to 12 free fractional shares. And every month they have a promo going on. This month's promo is that if you refer 6 friends by the end of the month, only a couple weeks left, they're going to give you $1,000 cash to invest however you like. Your first referral gets you $20, second gets you $40, third gets you $60, fourth gets you $100, fifth gets you $300, and sixth gets you $480 for a grand total of $1,000 to once again invest however you'd like. This is part of their advertising budget, by the way. A lot of people wonder, where's this money come from? It comes from not having to waste money on billboards and TV commercials and stuff like that. So everything will be linked in the description. Please take advantage. This one is time sensitive. All right, so today I wanted to talk about some stimulus information. The stimmy checks that many of us haven't talked about in a really long time. Let me set down my camera for just 1 second so I can get myself situated here. And I wanted to talk about something because we haven't really heard a whole lot about stimulus checks in quite a bit of time. In fact, we have not talked about stimulus since the last stimulus check, which was, don't even remember off the top of my head, but we learned last year, toward the end of last year, 2022, we learned that there were talks of a new type of stimulus check called an inflation relief check. A lot of the inflation was created in the first place by printing all the currency to get the stimulus check put out in the first place, and even more to get the second one put out, and even more to get the third one put out. And then they were talking about printing even more currency to get a fourth stimulus check. This one branded a little bit differently. This one referred to as an inflation relief check. This was being talked about in a very serious way late last year when inflation was at its highest. By the way, highest in like multiple decades. The highest inflation I've seen during my lifetime, the highest inflation many have seen during their lifetime, the highest in 30 years, maybe 40 years. Crazy high inflation. Now, thankfully, inflation has come down dramatically since that peak. In fact, now I know this video is coming out in the middle of June. There will be another inflation report released around the time that this video comes out, so I haven't seen that report yet. It's not out during the time I'm recording this video, but I can say that as I'm recording this video, every single inflation report that has come out over the last 9 or 10 months, consistent decline. Every single month, inflation has dropped by a little bit. 9 or maybe 10 consecutive months. And by the time the next report comes out, if inflation's even lower than it was last time around, that'll mark 10, maybe 11 months of consistent decline for inflation, which would be good news. It's already good news that inflation has been on a decline, and it would be even better news for us to learn that inflation has come down even more. That would be fantastic. So the inflation relief checks was a very short-lived topic. We haven't heard anything about it since last year, or at least I haven't heard anything about it since last year, and it seems as though the idea has been scrapped, which I think is a good thing, because if they were to put out another form of a stimulus check, I personally believe it would probably cause inflation to go in an upward direction. Now, granted, I don't think that they would have to print currency for a fourth stimulus check. This was just California talking about it, by the way, but a couple of other states had their eyes on what California was doing. Like, hey, that might not be a bad idea. There's a lot of COVID relief funds, a lot of currency that was printed as COVID relief that is kind of still sitting there idle, because we ended up printing way more than we needed, because as it turns out, it wasn't really as bad as many people expected it to be. Which, pros and cons there. This video isn't to talk about that, but, if they didn't do what they did and end up being worse than expected, then a lot of people would be pointing the finger and being like, hey, you should have done more. And, it's very easy for us to say, hey, you should have done less, but, it is what it is, I guess. I don't know. Anyway, moving on from that. Point being is that I don't think we would have to print more currency for there to be for there to be a fourth stimulus check, in this case branded as an inflation relief check, because we have an ungodly amount of currency sitting there that hasn't been used for what it was intended to be used for, at least. But thankfully, with inflation coming down every single month for the last 9, maybe 10, or by the time this video comes out, potentially even 11 months, I think it's safe to say that we definitely don't need an inflation relief check. I have noticed inflation coming down in many, many, many different ways. I've experienced things that I was buying things that I've been buying my entire life, prices going way, way up for a while, and the prices have been coming down slowly but surely over the last, close to a year at this point. So that's good news, and a lot of people are seeing that. A lot of people are experiencing that. Inflation is still high in certain areas. Inflation is still going up in certain areas, but core inflation overall has been on the decline, generally speaking. So the update that I have is that it seems as though inflation relief check concept has been canned. Haven't heard a word about it in, I don't even know how long, over half a year. Haven't heard anyone talk about anything stimulus related. Haven't heard anybody talk about anything inflation relief related, and inflation has been on a decline, which is good news, because now we for sure do not need inflation relief now that inflation is kind of, simmering down. So, all of that aside, I wanted to talk about some of the tools, some of the concepts, some of the methods that I use to combat inflation. Because guess what? Inflation is a very real thing. Inflation is an inevitable thing. Inflation exists whether you want it to or not. Inflation exists on good years and on bad years. Inflation is higher at certain points due to a variety of different factors. And inflation is actually a good thing. Inflation, when things become more expensive, isn't actually a problem. It's not a problem when rent goes up. It's not a problem when food goes up. It's not a problem when gasoline goes up. It's not a problem when the price of cars go up, the price of homes go up. It's not a problem when the price of clothing goes up. That's not a problem. And that shouldn't affect anyone. If, big if here, it shouldn't be a problem if the economy is growing at a pace or at a rate that inflation is growing at. See, average inflation is between 2 and 2.5%. That's what you should expect to see on a yearly basis. But if your income is growing by 2.5% or more on a yearly basis, what's the difference? If you're making 2% more money and food is 2% more expensive, it all levels out. The problem is, in recent years, we've seen inflation doing what it's supposed to be doing, moving in an upward direction, but the economy stopped growing. And then, to add insult to injury, we saw inflation skyrocket, highest it's been in decades, with the economy not only not growing, but the economy retracting, shrinking, becoming weaker, going in a downward direction. It would be bad enough to see high inflation when the economy's not moving at all, but we saw high inflation when the economy moving down. Inflation up, economy down, double whammy. That was the problem right there. That was one of the many problems. And on top of that, it was persistent. It wasn't just a month where inflation just, oh my God, inflation went up. How did that happen? Oh, false alarm. The next month it went back down. Nope. Inflation was going up and 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 up until it reached its peak. And at the peak is when people were talking about inflation relief checks. And when it reached its peak, we finally got a little bit of good news. Like, hey, inflation is still sky high, but it's a little bit less sky high than it was last month. I remember like people were celebrating. Oh my God, like inflation went down a little tiny bit. Like, okay, yeah, but it's still like friggin' up in the clouds. We had inflation higher than Snoop Dogg. And it was good news to see inflation go down a little bit because, it was like a small sign. Like, is this an indicator that inflation is finally beginning to cool? First time in how many months inflation moved in a downward direction as opposed to skyrocketing? And then we got a second consecutive month of inflation moving in a downward direction. And then a third and a fourth and a fifth and a sixth. And at this point, I think we're at the 9th or 10th consecutive month, potentially 10th or 11th. I have my dates mixed up here. I don't remember exactly how long it's been, but point being, it's been, going on a year of consecutive, of a consecutive decline when it comes to inflation. That's good. Another problem with the stimulus checks is not many people used it for what they were supposed to use it for. The first 3 stimulus checks that we got, a lot of people did what they weren't really supposed to do with it. A lot of people, they weren't using it for food and rent. A lot of people were using it and dumping it into like meme stocks and meme coins and stuff like that. And it threw everything out of whack, even more than it was already thrown out of whack from everything going on the last couple of years. So everything was already upside down, and then everybody, misused their stimulus checks, and it went from being upside down to now upside down and backwards, and it just threw everything out of whack multiplied by 2. But point being is that you can expect to see inflation, and you shouldn't be afraid of inflation. It should be fine if the economy is growing at a pace or at a rate to keep up with it. Shouldn't be a problem. Who cares if we have 2.5% inflation if the economy is growing by 2.5%? It's not a problem. Everything levels out. Everything's exactly the same. But that wasn't what we were seeing. We were seeing inflation more than 3 times higher than it should have been with the economy retracting. So that's what caused an even bigger disaster. What I've been doing over the last couple of years, what I've been doing since 2018 or 2019, I've been prepping in a variety of different ways. Now, I'll be very quick about this because I want to also talk about investing and what to do to financially prepare yourself. But let me talk about something else first, because this is just as important. A lot of people want to know, how can I make more money, or how can I save more money so that I can take care of these financial things and so I can pay for these things, failing to realize that if you start preparing yourself with supplies and food and stuff like that right now, what if you buy everything or start to buy everything that you need, so that if there's a shortage of this or a shortage of that, it's like, okay, it's no big deal. Prices go up because supply and demand, everybody needs this and there's none of it. Prices go up. Meanwhile, you've stockpiled everything already. See, that's what happened to me during the crash of 2020. I spent 2018 and 2019 buying a whole bunch of supplies and things that I would need. I remember I had like several months worth of food stockpiled up already, canned goods, you know, like canned vegetables, beans, soups and stuff like that, boxed pastas, MREs, freeze-dried stuff. I got myself a food dehydrator. That way I can dehydrate, you know, fruits at home. I got myself a water purification unit. That way I didn't have to worry about buying, you know, cases of water or gallons of water or anything like that. I got all of these things ahead of time, plus a lot of emergency supplies and equipment and tools, first aid stuff. I got all myself these things, and I was kind of like stockpiling them away for like 2 years. And when the crash of 2020 happened, and everybody started, you know, like getting into actual physical fights with each other in Walmart over cases of water, I was kicking back with my feet up because I had a water purification unit that will, you know, as long as I replace the filters every once in a while, it'll take care of me the rest of my life. People were fighting over paper towels, and I was kicking back with my feet up because I bought this massive pack. I think it was a 500 pack of compressed paper towel tablets. People were fighting with each other over food. Meanwhile, I had like a miniature grocery store in my own house. Was I set for the rest of my life? Absolutely not, but I was for sure set while everybody else was in a state of panic. And why was this? It's because I prepared myself. Did I know the crash of 2020 was going to happen? Absolutely not. It caught me off guard. Freaked me out in more ways than it didn't. But I was preparing. What was I preparing for? Not sure. I was preparing myself in a variety of different ways and hoping to be able to cushion the blow of whatever came my way. And was I able to do that? Yes. I had months worth of food stockpiled up already. Long shelf life food, some of which I still have from back then. I had the water purification unit. I think I got myself a portable power station that year. This was after everything crashed, but I still got it that year, and it's something that I wanted to get. I had a bunch of stuff that I needed. And when prices skyrocketed in 2020, everybody was looking at water and paper towels and stuff like that and be like, wow, look at these 2020 prices. And I was kicking back because I already bought a whole bunch of those things at 2019 prices. See, that's the power of preparation right there. That's why everybody should start prepping at least a little bit. You don't need to get carried away. You don't need to be one of those doomsday, you know, crazy people. I strongly disagree with that, you know, hardcore paranoid mindset. I try to stay as far away from that as possible. That's why I don't make a lot of videos about prepping, because it attracts those type of people, and I don't really want to be associated with that. But you should prepare yourself. You should get the things that you know you would need during an emergency. Think of it as see, the way I got started prepping, it was more so for like a hurricane. You should 100% prepare yourself for a hurricane, but maybe get enough stuff to prepare yourself for 3 hurricanes. If you want to get, you know, maybe like a week's worth of food or something like that, you know, God forbid something happens, get yourself a week's worth of food, but maybe get yourself 3 weeks worth of food. Long shelf life stuff. You could get started. And here's the last thing I'll say about this. The easiest way to get started is every time you go to the grocery store, buy one extra can of whatever you're buying, whether it's, you know, soup or something like that. Buy one extra can and store it away. Next week, go and get another one. Week after that, go and get another one. Every time a year goes by, if you do it every single week, you'll have 52 cans. And then you can start, you know, cycling through. Rotate them. Start consuming them if you want to keep, you know, 52, or you want to keep 20, or you want to keep 100, whatever your goal is. When you hit that number, start cycling through. Start cracking them open and eating the soup. And then next time you go to the store, replace that can with a new can and keep it in your storage. Only costs, like, what's that going to cost you? An extra $2 a week? to prepare yourself for an emergency, I don't think it's a bad idea. Not at all. And that's the easiest way to get started, and that's why I encourage people to start prepping. Start prepping now. It's better to have it and not need it than to need it and not have it. Because guess what? God forbid something happens. God. That makes me happy to see kids biking and stuff like that. You don't see a lot of kids biking nowadays because they're all, at home with their iPads. Good to see them outdoors. Good for you, kids. Anyway, here comes another one. So anyway, it's better to have it and not need it than to need it and not have it. And it's better to get it now than to wait until it's too late, because number one, if you wait until it's too late, you might not be able to get it at all. And if you are able to get it, prices are going to be a lot higher, because that's just the way supply and demand works. When there's less of something going around and more of a demand for it, prices go up. Surprise. So that's all I'm going to say about prepping. That form of prepping. Think of it as, preparing yourself for a hurricane or for a blackout or for, I don't know, whatever the area that you live in is prone to, really bad winter storms or hurricanes, tornadoes, stuff like that. Just, prepare yourself. It's location based. For me, hurricanes and snowstorms are probably my biggest concerns when it comes to stuff like that. So that's what I prepare myself for. And then I kind of double up on it a little bit. So anyway, moving away from that form of prepping, let's talk about financial prepping as well. And by the way, what I just talked about is a form of financial prepping too, because, if you're ever in a position where maybe it's a financial situation, maybe you lose your job or something happens, you get injured at work and your paycheck gets cut or reduced or something's going on, and you're not able to afford what you were once able to afford to buy and stuff that you're going to need. Well, guess what? You already have those things. You braced yourself for a couple months of maybe not having the income that you're used to having. So anyway, now when it comes to financial prepping, there are a couple things that I do and a couple things that I have done over the years to prepare myself financially and combat inflation to the best of my ability. Is it completely bulletproof? Is it foolproof? No. There will be times, and there have been times, where it didn't work out as well as I wanted it to work, but I was still a whole lot better off than if I were to not utilize some of these tools and some of these methods. I'll talk a little bit about silver and gold. I'll talk a little bit about investing. I'll talk a little bit about business and stuff like that. And just a friendly reminder, my favorite stock trading app that I use, and one of the ways that I build wealth over time, passive income to increase my income and free up more of my time and brace myself for financial hardships, because at least I'll have another source of income coming in. God forbid something were to happen to my income. I use Webull. You can too. Download the app and fund your account for up to 12 free fractional shares. And if you refer 6 friends by the end of the month, they're going to give you $1,000 cash. It's part of their advertising budget for helping them build their platform. 1 referral gets you 20, 2 gets you 40, 3 gets you 60, 4 gets you 100, 5 gets you 300, and 6 gets you 480 for a total of $1,000 to invest however you'd like. Webull link in the description. You only have until the end of the month to do so, so please move fast. Okay, so now to get into the specifics and how I go about doing this. We could talk a little bit about silver and gold first, because that's kind of how I got started. I started stacking silver and gold the tail end of 2017. I got much more aggressive in 2018. I was just as aggressive in 2019. 2020 rolled around. I spent the first half of the year being aggressive, and then I tapered off a little bit and focused a little bit more on building wealth as opposed to preserving wealth, because I think silver and gold are a really good way of preserving wealth. The problem is, if you don't have wealth to preserve, then you're kind of, I don't want to say shooting yourself in the foot, but you're not really inching yourself ahead. You're kind of just grasping onto what you do have as opposed to building more and then translating it over to silver and gold to preserve what you built up. I think it makes more sense for me at the moment. At a different point, when the economy is in a different place and when different things are going on, it'll make a whole lot more sense for me to go back to stacking silver and gold. But at this time, I'm much more focused on investing because I know that I need to build wealth. But I got started with silver and gold, mainly silver, because I saw it as an opportunity metal. I saw it as something that was incredibly overvalued at the time, and I knew that I can get my hands on a bunch of it for a really good price, and at the time a very, very, very low premium. And I knew that over an extended period of time it would absolutely add up, especially if spot price stays low. So I started stacking silver and gold, and this is really all I did for the first 2 years or whatever. 2018 and 2019 were like my I don't want to say my golden years, but they were definitely my silver years. And I was stacking a little bit of gold on the side, of course, as well. Primary focus was on silver, but I knew diversification was important, so I was stacking gold too. And that was really what I was focused on. I was just, working as much as I could, working as hard as I could, saving as much as I could so that I can convert as much currency as possible to the beautiful precious metals, because I knew that it was a really good way of preserving wealth. Then 2019 is when I started to invest. 2020, during the crash, is when I really started to dive in. 2019 is when I started... is when I opened up my first investing account and started testing out the waters. Nothing was going on in the world at the time. This was September 2019. Fast forward 6 months, the market completely collapsed because there was this big sickness scare, worldwide health crisis, and massive corporations were taking a huge hit. Small businesses were getting annihilated, and people were losing their jobs left and right. People were, couldn't survive without a stimulus check. People were actually, I was the first one to say, I was like, we don't need a stimulus check. We need our normal paychecks. That's what we need. We don't, paychecks are better than stimulus checks. Paychecks are better than unemployment checks. That's, I still believe that. I believe that back then. I believe it today. And you can't change my mind on that. So anyway, where was I? Oh yeah. I spent my first 6 months just dabbling. Didn't know what I was doing when it came to stocks. Didn't really understand the stock market. I just knew that I wanted to be a part of it. I knew that diversification was important, and I knew that it was the way to go if you're starting from nothing, or you come from not very much. If you're not, if you're not making a crazy amount of money, and if you don't come from money, it's hard to just, automatically dive into real estate and start these, big businesses and massive investments and whatnot. It's kind of tough to do. But if you're starting from very little, or starting from absolutely nothing at all, the stock market is a very good way, or actually 100%, in my opinion, the best way you can go to start building wealth, to get into the beginning stages of building wealth, because you can get started with $5. It's not going to get you very, very far, but imagine $5 here, another $5, later on, next time you have another $5 laying around, another $5 on top of that, and sure enough, you got $100 in. You put it into, I don't know, let's just say the S&P 500, which has an annual average rate of return of 8%, already adjusted for inflation. It's 10%, not factoring in inflation, but with inflation factored in, it's about 8% on average. So your $100 that you invested a year from now, you can expect to be worth close to $108 with a dividend yield of roughly 1.5%, which means your $100 is paying you $1.50 just for having that position. So if you add that on top of the $100 that you put in, plus the $8 that it grew by, you're now looking at $109.50, give or take, in just a year, which I know, being up by $9.50 total, isn't really anything impressive, but you want to know what it is? It's a start. That's what I believe. And you don't have to get started with a little $5 here and there. You don't have to get started with $100. If you have more, if you have $500, $1,000, same thing. But instead of your $100 being worth roughly $108, if you have $1,000 to work with, your $1,000 can be expected to be worth roughly $1,080 with that 8% average annual rate of return. plus $10 and what, 50 cents, or no, $15 because of that 1.5% dividend yield for having that position. Having a $1,000 position pays you 1.5%. That's $15 right there, plus $80 worth of capital gains. That's $95 total. You put $1,000 in, a year later, you can expect it to be worth approximately $1,095. Now, you're going to have some good years. You're going to have some bad years. You're going to have some amazing years like 2021. You're going to have some terrible years like 2022. You're going to have some years where you're just moving sideways all year. You're going to have some years where you're going to be moving sideways for 2 or 3 years at a time. But on average, there's an upward trajectory. 10 steps up, 5 steps down. 2 steps up, 1 step down. 7 steps up, 3 steps down. 12 steps up, 6 steps down. You're going more up than down on average. Now, some years you will see red. Last year, the market was down, I believe, 16%. My year to date, I was down 1-point-something%, but overall, from start, not just for that year, overall, I was still up 20-something%. I'm still up like 24, 25% overall. But that year to date, I was down, I think, like 1.5%, while the market was down 16%. So even though I was in the red, I still beat the market by a significant amount. The year before that, I think the market returned like 23% or something like that. But year to date, I was up 27%. And Warren Buffett was up, I think, 26%. So he beat the market and I beat him. Who can say that? How many people can walk around being like, hey, I beat Warren Buffett this year. I didn't beat him by a dollar amount. I just beat him by a percentage. But the point being is that this is what I do, and this is what I've been doing for the last couple of years. I started out with individual stocks, buying, for the most part, the blue chip stocks, the ones that have been around for 30, 40, 50, 100 years, maybe some even longer. The ones that have paid a consecutive dividend and give their shareholders a dividend raise every single year for decades and decades and decades on end. I figured that was the best way to go. And it can be an incredible way to go. But the only issue there is you have to keep up with earnings reports every 3 months. You have to pay attention to what management is up to. You have to take a look at how they're spending their money, how they're borrowing money. Are they too debt heavy right now? What is, how are they going to continue to innovate? How are they going to continue to be creative? How are they going to be competitive with new up and coming companies, on the come up right now? You have to look at a lot of different things, which is why right now for the last couple of years, I've been way more focused on index funds, broad market index funds that have, some of the biggest, best companies in the US all in one. So you don't have to worry about paying attention to all these different reports. You don't have to read through 15 companies' different earnings reports. You can have 500 different companies all in one, and the research is done for you. Everything is taken care of by default. And if you have the S&P 500, for example, which has the 500 biggest, baddest US companies that are publicly traded all in one basket, if the one at the very bottom of the list, number 500, isn't doing so well and isn't performing the way that it should be performing, and the next one in line who isn't in the fund just yet is outperforming, then guess what? They get switched. And you don't have to do any switching. You don't have to pick and choose. You don't have to worry about finding the needle in the haystack. You just buy the haystack and the needle's already in there. And guess what? There are a lot of needles in there. And the S&P 500 is the one that I was referring to when I said an average annual rate of return of about 8%, adjusted for inflation already. 8%. You're going to have some years where you're going to see a 12% return. You're going to have some years where you're going to see a negative 4% return. You're going to see some years where you only return 2%. Some years where you returned 3%, 7%, 30%, negative 15%. You're going to see all of this. You're not going to have a guaranteed 8% every single year. It averages out to 8% over a 20-year span. No one has lost money investing in broad market index funds and making consistent contributions and reinvesting dividends over a 20-year period. There hasn't been one person that lost money by doing that. People have lost money by investing in individual stocks. People have lost money by investing in index funds that aren't incredibly diversified. They have a smaller number of holdings. The S&P 500 has obviously 500. There are some that have 100. There are some that have a couple thousand. If you don't want to go with just the S&P 500, if you're thinking to yourself like, well, I don't want just the 500 current best or best at this time, I want exposure to the smaller caps, the smaller companies that are doing incredibly well too. Well, then instead of getting the S&P 500, you can go for a total US market index, which has the S&P 500 in it, as well as, like, I think 2 or maybe 3,000 smaller companies that are publicly traded as well. If you're thinking to yourself like, well, I don't want, okay, that's very, you know, I don't want to be too, I don't want to lean too heavily on just US companies. I want exposure to an emerging market, or the emerging markets out there. I want, you know, foreign companies as well. Well, you can go and get yourself an international index, which has everything except for US companies. Or you can go for a total world index, which has US companies and foreign as well. Everything, every single publicly traded stock is in the fund. If you go for the total world index, there's an index fund for everything. Absolutely everything. There's a bond market index. There are dividend growth indexes. There are tech indexes, which are made up of the Apples, the Microsofts, the Teslas of the world, Amazon, microchip companies, stuff like that. Software, everything. Dell, whatever you can think of that's tech related and publicly traded, it's like they're in there. These tech stocks. So no matter what it is you're looking for, there's an index fund for it. And in my opinion, index funds are a better way to go if you don't have the time or knowledge to do all of the research. You can, now this might sound ridiculous, you can blindly throw your money into a broad market index fund without even knowing what it's made up of. You think I know all 500 companies? Can I name all 500 that are in the S&P 500? Absolutely not. Can I even name 100 of them? If you gave me time to list off companies, yeah, I can. If you give me time to, you know, think of 100 different companies, yeah, I can do that. I don't know all 500. Off the top of my head, I don't even know 100. Off the top of my head, I don't even know 50. But you don't even need to know one. You don't even need to know what the stock market is. You don't even need to understand the stock market to invest in broad market index fund and come ahead. Be ahead. Build wealth completely passively. You can set up recurring investments where, and I'm at that part where there are less trees over here. It's more windy and by the water. The audio might get a little iffy, but it is what it is. Bear with me. The point being is that you can blindly throw your money into a broad market index fund and come out on top. That's what broad market index funds are designed for. Maximum exposure, maximum diversification, minimal time spent doing research. You should do some research and figure out which index fund makes the most sense for you, but you don't need to research or constantly do research or keep up with earnings reports unless you really want to or unless you enjoy it. You can absolutely do that. It's not a bad idea. It won't hurt you keeping up with what specific companies are doing. But you don't need to do that with index funds. It's the most hands-off approach you can take. You can do it hands-free, and you can automate everything. You can set up recurring investments. You could do this on Webull, the app that I use, link in the description. Once again, I'll remind you in just one moment, but on Webull or most stock trading apps, they let you do recurring investments, which means you can set up for the app to automatically take out a certain amount of cash from your checking account or whatever. If you want to set up $100 a week, it'll automatically transfer over $100, and you can set up where that $100 goes. So they take the $100 out for you because you told them to. They take that $100 and put it into whatever index fund or stock. They do that themselves because you told them to. And usually the dividends will pay out every 3 months. You can set up for dividends to be automatically reinvested. So you can put your phone down, you can sign out of your computer and check back in 5 years and see that every single week for the last 5 years, they've taken $100 out and put that $100 into a fund or stock of your choice. Dividends have been reinvested every 3 months for the last 5 years, and you can see that everything was done automatically for you. You automated everything, completely hands-off, with only a measly $100 a week. And if you don't have $100 a week that you can afford to do this with, you can do it with $10, $5 even. You don't need an absurd amount of money to get started. You don't need to have a high income. You don't need to be a wealthy individual. You don't need to have the highest level or the highest financial IQ to get started. All you need to get started is a couple of bucks and a stock trading app. Again, the app that I use is Webull. Download the account and fund it. Even as little as a penny, you're going to get up to 12 free fractional shares just for doing so. And every single month, they have a promo going on. This month, if you refer 6 friends by the end of the month over the next couple of weeks, they're going to give you $1,000 cash to invest however you want. Normally, they say if you refer 1 friend or if you refer 3 friends, we're going to give you a free share of Apple or a spin on a spin wheel where you can win multiple shares of Apple. This time around, they're giving you $1,000 cash to invest however you want. You can go and buy a bunch of Apple stock with it if that's what you want to do. You can invest it in an index fund. You can invest it in whatever you want. $1,000. 1 referral gets you $20. 2 referrals gets you 40, 3 gets you 60, 4 gets you 100, 5 gets you 300, and 6 gets you $480 for a grand total of $1,000 to invest how you want to invest it, however you want to do that. You choose where that $1,000 goes. It's your choice. It's your cash to do what you want with. And you only have a couple weeks left of this promo, so please make the most of that. Time is running out. Webull link in the description. But that's the easiest way to get started. Doesn't have to be the stock trading app that I use. I recommend it because I use it every single week, and I'm a huge fan of it. And the promos are so fun. Every single month there's a new one. Every single month they give you a goal that you can set for yourself and a goal you can hit. And when you hit it, number 1, you feel accomplished, but 2, you earn something out of it. In this case, up to $1,000, depending on if you refer all 6 people, or a free stock, or a free handful of stocks. Like you earn something out of it. And it's part of their advertising budget. Rather than wasting all this currency on billboard and TV commercials, they reward the user, me and you, for helping build their app for them and with them. It's fantastic. I'm a huge fan. And they don't pay me to advertise in their videos. I get free stocks when people use my link, but you get free stocks too when people use your link. I'm not paid any more, or I'm not given any more. I'm not given anything extra or special for talking about it. I share it because it's something that I believe in. And it's something that I know for an absolute fact can help everyone who's watching this. So anyway, you can set up automatic, or you can automate everything so that you could be as hands-off as possible. And that's how you can go about combating inflation. Because with a broad market index fund that's averaging an annual rate of return of 8% adjusted for inflation, you already factored in the average inflation of 2, maybe 2.5%, and you're still coming out on top, up roughly approximately on average 8% a year, rather than being down 2.5% a year because of inflation. and sitting stagnant. You're not losing, you're winning multiple times over. And it compounds over time. Because a lot of people think, oh my God, if I want to reach $100,000 or $10,000 or $1 million, I need to invest $10,000 or $100,000 or $1 million just to get to that point. No, you don't. It grows over time. The growth will help you get there. And the dividends that they pay you for holding can be reinvested to beef it up a little bit more to help you get there. And if you make regular contributions, it'll help you get there. You're attacking your goal from multiple angles just by doing it this way, and you can do it automatically. You can automate everything, or you can do it manually, which is what I do just because I enjoy it. For me, it's a hobby. For me, it's fun to buy into the index funds or to reinvest dividends on I do that manually, all manually, but you can automate it all. And I'm sure at one point I will, but right now it's fun. It's exciting for me to do. It's something that I enjoy doing. I get, some satisfaction out of it. So it's just, I like to sign in every day at, 9:30 when the market opens up. And I like to, throw a little bit of currency into my 2 index funds of choice for my regular income investing account. And every single week on pay week, I like to make a contribution to my Roth IRA, which is a tax advantage retirement account. You're investing dollars that have already been taxed, and it'll add up over time with the growth and the dividends reinvested, and then you can cash out after you hit the retirement age of 59 and a half, or you can keep on letting it grow. You don't have to cash out at that point. Tax-free, 100% tax-free. You don't pay taxes on the capital gains, you don't pay taxes on the dividends, 100% tax-free because you paid taxes on the dollars before you invested them. And you can also do that on Webull. Once again, link in the description. The point being is I enjoy doing that. Every week I make a Roth IRA contribution, which is made up of 4 different index funds. If you're a VIP club member, you know what those 4 index funds are. If you're not a VIP club member, the VIP club is something that I created. It's on Patreon. You get access to every single one of my videos early and commercial free. No YouTube ads pop up or anything like that. It's completely ad free, and I post them at 4 a.m. I post videos every day at the moment, so every single day at 4 a.m. in the VIP club, that's where the video will be. Otherwise, you have to wait until 5 p.m. Eastern Standard Time to watch them. So you can watch it early in the morning or anytime during the day, or you can wait and watch it with everybody else, and YouTube puts their commercials throughout the video. So it's your choice. If you want to be a VIP club member, the link will be in the description. That's all I have to say about that. But VIP club members know what my 4 retirement account index funds are. As for my regular income investing account, see, the Roth IRA, that's for retirement. My income investing account is just the index funds and the stocks that I buy into and that I have been buying into for the last couple of years, so that I can increase my income. This is not tax advantaged. You get taxed when you sell. If you sell at a gain, although I've never done that, I've never sold a stock. I do get taxed on the passive income that I generate, but at a much lower rate than I get taxed at from my paycheck. So in a weird way, it is kind of tax advantaged, although it's not technically. But let's just say I make $50,000 a year at work and I make $50,000 a year through passive income dividends. I'm paying more money in taxes from the money that I make at work than I do from the passive income. So you save more money earning passive income than you do active income. It's crazy. It's awesome. The tax code was written by business owners, landlords, and investors, and the tax code was written for business owners, landlords, and guess what? Investors. The tax code was written and designed to be this way. A lot of people think, oh, that's not fair. Why do the investors pay less in taxes? Become an investor. Like I said, all it takes is $5 to get started. All you need is a stock trading app that's free to download, free to use, pay nothing for having it, and you can get started. and you can start building wealth and accumulating more wealth. The snowball effect, the compound effect does its thing. Once you get the ball rolling, the snowball is rolling down the hill, and as it rolls down the hill, it collects more snow. As it collects more snow, the bigger it gets. The bigger it gets, the faster it rolls. The faster it rolls, the more snow it's able to pick up in a shorter period of time. The more snow it's picking up, the bigger it gets. The bigger it gets, the faster it rolls, and it just keeps on going. That's the compound effect. That's the snowball effect. They're synonymous. That's how you should look at it. That's how you need to look at it. That's wealth. That's wealth 101 right there. Use and abuse the compound effect. It's not taught in schools. You want to know why it's not taught in schools? Because the teachers don't even know. How are you going to teach something that you don't know about? There's a game to be played, and most people don't know that the game exists. Most people don't know that it's attainable. Most people don't know that it's achievable. Most people don't know that it's accessible even. Most people have no idea. It's like learning something for the first time. Like, oh wow, that's awesome. I didn't even know that was a thing. No idea. This is one of those things. You don't know about it until you know about it. It's hidden in plain sight, and it's designed for you to build wealth, accumulate more wealth, use your wealth to build more wealth, use your wealth to accumulate more wealth. Now you have wealth sitting on top of wealth, and guess what? It doesn't take millions and millions and millions of dollars to get there. It doesn't take millions and millions and millions of dollars to achieve financial freedom. It doesn't take millions and millions and millions of dollars to combat inflation, which is what we're talking about in this video. All of this comes back to that. All of this comes around full circle. We're talking about combating inflation here. That's why I'm talking about these things. We're not taught how to combat inflation. We're taught to do the bare minimum. We're taught to do everything what's perceived as the safe way, the safe and secure way. Oh, get a nice, safe and secure job. Guess what? I agree. Please do that. I think you're foolish if you don't do that. But use your safe and secure job to invest. Use your safe and secure job to generate some passive income on the side. And I always say this, and I'll say it one more time because I haven't mentioned it in this video. Take a look at your monthly expenses. Number one, figure out what you can get rid of, what you should stop paying for, things that you don't need to be paying for anymore. Get rid of those things, but figure out your smallest necessary expense. Maybe it's your phone bill, $50 a month or $20 a month, whatever it is. Do the math, crunch the numbers, and figure out how much money you need to have invested for the passive income to take care of your phone bill for you. Let's just say it's let's just say whatever, or maybe it's a gym membership, $10 a month. Figure out how much money you need to have invested to generate $120 a year. Now all of a sudden your passive income is paying for your gym membership for you. Your gym membership has been waived by the passive income. It's been waived by the wealth. You do not need to be a multi-millionaire. You need to get your gym membership taken care of for you. You need to get your phone bill covered for you. You need to get whatever's next after that, however much money you spend at the gas station every month. Maybe that's $100 a month or $200 a month. Figure out how much you need to have invested. Now that you got your gym membership taken care of, now that you get your phone bill taken care of, how do you get the gasoline taken care of? How do you get your car payment taken care of? How do you get all of your groceries taken care of? What do you need to see? These are the steps you need to take. Every time you hit a goal, set a goal for yourself, a small achievable goal, get there, and then immediately raise the bar. Okay, I got my $10 a month taken care of. What do I need to do to get an extra $40 a month? How do I get up to $50 a month coming in so I can pay for the gym membership and my phone bill now? Okay, now that I got both of those taken care of, how do I get the next? Eliminate your expenses. That's what wealth is about. Get the passive income to take care of your expenses for you. And eventually, it's going to take a long time, but it's 100% achievable. You can get to the point where your rent is covered by your passive income. You can get to the point where your entire life is taken care of by your passive income. That right there is true, complete and total financial freedom, but you don't have to get there today. Get your smallest bill covered. Get your smallest expense taken care of. That right there is the ticket. That right there is the secret. That right there isn't taught. People don't know how to play the game because people don't know that there is a game to be played. You can do this. I didn't know that I could do this. And for the last 3 going on 4 years, I've been playing the game, and I figured it out. I figured out how to play the game, and I've been winning ever since. Regardless of what the market is doing. In 2021, I was up like 27%. In 2022, my overall return was still in the low to mid 23, 24, something like that percent. But year to date last year, I was actually down 1.6%. I was still way up overall, but for that year, I was down 1.6%. But guess what? I still made all my dividend income. I still made all my passive income, and it's constantly growing because every 3 months I get paid, and every 3 months when I get paid, I reinvest it right back in. Every single year, I have been dramatically increasing my dividend income because I just keep on investing. And when I say dramatically increasing my dividend income, I'm not talking about, hey, I'm making, $15,000 this year and I made $9,000. That's not what I'm talking about. It's not nearly that much. One day I believe it will be. But the goal is to be making enough passive income to appear as though I'm working a secondary job without working a secondary job. Imagine working your full-time job and getting paid for it, but you're also getting paid for a part-time job that you're not working. That's the goal right there. Don't step in on your first day and be like, oh, I need to become a millionaire. No, figure out how to make an extra $100 or $200 a week or $250 a week. That's $1,000 a month. Start small. Don't start at the end, start at the beginning. Start at the end to figure out what your ultimate goals are, and then break it down and figure out, how can I get to those goals? How can I, little by little, step by step, inch by inch, brick by brick, get myself closer to my ultimate goal? How can I make it possible? How can I achieve this? You just figure out how. You need to figure out what you need to do to get there. What steps do you need to take? Spoiler alert, not many. It might take you longer, or it might be quicker than how I'm doing it, but we're doing it the same way. Maybe you make more money than I do, but maybe you have more expenses than I do. Therefore, I'm able to contribute more. Or maybe you're making more money than me, but you decreased your expenses as best you can, and you're keeping more money than I have at the end of each week or at the end of each month, and you're able to invest more. It doesn't matter. It's not a race. It doesn't matter if you get there first or if I get there first. As long as we both get there. That's the goal. That's what we're working on here. That's the mission. And if you see an average annual rate of return of about 8%, adjusted for inflation already, with dividends reinvested, whether it's the S&P paying you 1.5%, or it's a higher yield index fund paying you closer to 3%, or if it's an individual stock paying you 1%, 5%, 7%, whatever it is, the goal is to combat inflation. And not only that, build wealth. Reinvest the cash payments that they give you to build up more wealth, keep the snowball rolling, or give it another push to make it roll a little bit faster. And however much you made this pay period, with dividends reinvested and more contributions made, means that next pay period you should expect for it to be a larger payment, dividend payment, passive income payment. Something that you can use to slowly but surely eliminate your expenses. Oh, I got my $10 membership coming up this week. Oh yeah, I made $10 in passive income. Boom, my gym membership is covered. Take that, Planet Fitness. Take that, Verizon. I got my phone bill covered. That's what it's about. Eliminating your expenses by increasing your passive income. That right there is what it's all about. building wealth passively, automating it so you don't have to be hands-on, or be hands-on if you want, if it's something that you enjoy. It's what I enjoy. I like it. I have fun doing it. Most people probably think it's boring. Most people don't get, a rush out of it. Most people probably don't get a lot of excitement or aren't too enthusiastic. Like, all right, yeah, looking at, charts and numbers and stuff like that. It's not anything fun. It doesn't have to be fun. You know what is fun? Building wealth and seeing it grow and freeing up your time, because financial freedom and the process of getting to and unlocking and achieving financial freedom means that you're also getting to and unlocking and achieving time freedom. That's what it's about. It's not about financial freedom. It's about time freedom, freeing up your time so that you can spend more time doing what you actually want to do. Having the option to take your full-time job and step down to part-time because you can afford it. You have enough passive income coming in to be able to do that. Or quitting altogether if that's what you want. Retiring a little bit early than you were expecting to retire because of that. Going on an extra vacation every year because of that. That's what it's about. Maybe instead of saying, I'm going to pick up an extra shift this week, you have enough passive income coming in where you don't have to do that, and you can go camping instead. You can go fishing instead. You can go to a car show instead. You can go to the movies with your wife or your girlfriend instead. You can hang out with your friends instead. That's what it's about. And it can be achieved. And I showed you how to do it. I told you how to do it. I explained how I've been doing it for a couple of years. And you can do so just by downloading Webull, funding your account, and getting the ball rolling on the app. The link is in the description if that's something that you're interested in. I don't understand how you wouldn't be interested in it, but it's there for you if that's something that you're interested in. And I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. Starting off with stimulus checks and inflation relief checks. That's how I wanted to kick off the video, and I wanted to spend the rest of the time talking about combating inflation, preparing yourself, cushioning the blow, and building wealth in the process. What are your thoughts when it comes to inflation? Is inflation relief necessary? Do you believe so? There's no right or wrong answer. I don't believe so, but maybe you disagree with me. Let me know, and let me know why. When it comes to combating inflation, how do you go about doing it? Maybe you do it through silver and gold. Maybe you think precious metals are the ultimate way of hedging against inflation. Maybe you're ahead of me in life and you've already started. Maybe you already got your foot in the door when it comes to real estate. I personally believe real estate is the king of building wealth and hedging against inflation. The ultimate, superior in all ways, but very, very, very hands-on, and takes a significant amount of more money to get in. So there's pros and cons there. I do not have any real estate yet, but maybe you do, and maybe that's your primary method of fighting off inflation. Could be precious metals, could be real estate, maybe it's index funds, broad market index funds, which is the way I go about doing things primarily nowadays. I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. If you guys like today's video, please hit that like button. Subscribe if you're new. I post new videos all the time. Subscribe to my second channel, which is my backup channel for exclusive bonus videos. Get yourself some DYDSS merchandise to help support the channel in the biggest possible way. T-shirts, hoodies, stickers, and coffee mugs available in a whole bunch of different colors, bunch of different designs, many of which are helping raise some funds and awareness for different charity organizations. Try out some G Fuel Energy Formula, $5 off your first order by clicking the link in the description. I hereby declare Snow Cone, which is this flavor right here, flavor of the month for June 2023. It's absolutely delicious. It's in my top 5. Sugar-free, low-calorie, packed with a whole bunch of vitamins, just like every other flavor. They have more than 50 to choose from. Link in the description if you want $5 off your first order. And then, of course, last but certainly not least, as I've mentioned a couple times already, make sure to download Webull and fund your account. They're going to give you up to 12 free fractional shares. Just for doing so, you can deposit as little as you want, even as little as a penny. It still works. It still counts. You still get your up to 12 free fractional shares. And every month they have a new promo going on. This month, The promo is for the month of June. A total of $1,000 cash paid to you for referring 6 friends. Your first referral gets you 20, second gets you 40, third gets you 60, fourth gets you 100, fifth gets you 300, sixth gets you 480 for a grand total of $1,000, $1,000 that you can invest however you want to invest it. They're not saying, hey, we'll give you $1,000 of this stock or $1,000 of that stock. They're going to say, here's $1,000 to get whatever stock or whatever index fund you want to get. It's $1,000 for you to invest however you want. It's part of their advertising budget. Rather than wasting a whole bunch of currency on billboards and TV commercials that nobody pays attention to anymore, they reward the user for helping us build their app with them. It's a fantastic thing. It's a beautiful thing. It's the way to go. We will link in the description. Time is running out. You only have a couple weeks left of this promo. And once again, I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. When it comes to inflation, when it comes to inflation relief, or taking matters into your own hands and hedging against inflation, combating inflation in a variety of different ways, maybe through precious metals, maybe through real estate, maybe through investing, maybe through a business, maybe a mix of all of those, or some of those, all at the same time for maximum diversification. How do you go about combating inflation? How do you go about fighting off inflation? And on top of that, not only keeping your head above water, but coming out on top, winning, not just avoiding losing, but winning. 8% average annual rate of return with broad market index funds. Maybe more, maybe a little less through this asset or that asset. How do you go about not just avoiding losing, but winning in dominant fashion? Head on down in the comments and let me know anything and everything related to today's video topic. Thank you guys so much for watching. See you next time. Don't you dare stop smiling. Peace.